It's important to say that we have stable or positive outlooks for most major housing and residential mortgage markets in 2018. However, since we're focusing on risks today, we continue to see overheated markets in some cities as a key risk area. This is not restricted to any particular region. It's a feature of housing market hotspots from Vancouver to Melbourne to Copenhagen. High levels of house price growth are usually supported by strong market fundamentals, such as low unemployment, high inward migration, and a slow catch-up in supply. But in some markets, buyers' expectations for further growth have become the primary driver, creating housing bubbles. And this is one area regulators have struggled to control. Interest rates and arrears have been so low in many markets that we think they will only move in one direction. However, we don't see these as a major concern for 2018 because rates are expected to remain stable or low in the key markets, except for the US, which primarily has long-term fixed-rate mortgages. Interestingly, the impact of rising rates and central bank normalization in the US is expected to first pose a risk for the mortgage market rather than housing. This is because remortgage volumes are expected to drop, which is likely to lead to some lenders relaxing their underwriting standards. The UK is facing a broader range of risks in 2018 and 2019 due to Brexit, no house price growth expected, interest rates rising slowly, and the continued impact of regulatory changes in the buy-to-let space. Prices in some overheated markets, like Oslo and Toronto, fell in 2017, while the markets showed signs of stabilizing in Sydney and Amsterdam. We expect these trends to continue next year. However, we've also seen the case of Vancouver, where actions taken to slow price growth led to a price decline that reversed several months later. If this happens in more markets, we see the risk of a sharp correction being shifted forward to another year. We don't see any immediate trigger of bubbles bursting in 2018. Macroeconomic outlooks are strong for 2018, and rate rises and the unwinding of quantitative easing are expected to be gradual to avoid such an impact. Limits on non-resident buyers have been enacted in various overheated markets in 2017. New limits from China on purchases by its citizens elsewhere in the world should combine with these measures to decrease one form of demand, which will work to cool these markets. However, we don't expect large drops in property prices because of pent-up demand from local residents.